Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 8th of July, 2022. Thanks for joining me today on episode number 2268. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at our convergence trading pre-market summary sheet, we have a mixed market. Now it has come off a little bit since the sheet was done about 7-8 minutes ago. It's moving towards a little bit more towards risk off. But the overall posture is mild. The DAX continues to be strong. The DAX has been on a tear. Again, helped a lot by a falling euro, I'm sure, although I'm not 100% certain why it's doing that. But overall, the DAX is holding up pretty well. The NASDAQ taking it in a chin. The big news this morning is, unfortunately, Japan's former Prime Minister Abe, was shot twice yesterday, once in the chest, once in the neck, as far as the latest reports, by what looks like a homemade shotgun. And that resulted in a pulmonary cardiac arrest initially, and then he was declared dead this morning. So that's a pretty big shakeup for Japan, where weapons are extremely hard to come by. But he was assassinated giving a speech in a city called Naya. So that's a world shock. We're living in just crazy times. And then in other news, lighter news, the U.S. non-farm payroll report, an unemployment report, came in today at 8:30 a.m. And the number is strong. 372,000 jobs were created in June, far beating the 300,000 expected. This is net negative for the market. The market's anticipating a soft number, and really the consensus is 268,000, and it beat it quite a bit. So you saw a negative response to that. The unemployment rate remains at 3.6. The prior's 3.6. The forecast 3.6. So that's okay. The participation rate has dropped slightly, 62.2% versus 62.3%. Hourly earnings rose by 0.3% versus 0.4% expected. Year on year, hourly earnings flat. Coming into the day, wholesale inventories expected at 10 o'clock. Look for 2% there. Fed's Williams at 11. And then this evening, we're looking for the inflation rate out of China. This is a key figure, looking for 2.3%. Can you imagine? They're still hovering in a 2% range. 2.3%, the year-on-year inflation out of China. So they're getting the inflation rate plus PPI at that hour. So if you happen to be trading, look out for those numbers. So that's that. Not much more to say other than, there are no major reports, but next week brings in some key releases out of Europe. Earnings kick in. We get the inflation rate next Wednesday. Bank of Canada reports, and so on and so forth. I think I went through this the other day. The PPI report on Thursday. So inflation is the big one Wednesday for next week, and then PPI on Thursday, and then we get Michigan sentiment on Friday with retail sales. Retail being that has been hit lately, so we want to see what that looks like. So starting next week, we may see some input that may cause some repricing. Let's turn our attention to the middle of the sheet here, the ES overnight status. The market is actually still balanced. I'm not seeing multi-distribution. I'm not seeing a P-shaped profile. I'm not seeing a B-shaped profile. I'm talking about volume here, volume profile, and we're trading. We pushed the low as a result of the non-farm payrolls, which, by the way, I don't know about you, but I found that number completely untradeable. The key comment I put into the Convergent Trading chat room relating to that number is I want to keep an eye on 38.94 on a pullback, which now has moved to 88 to 90, and we just held the 88.50 here for a pullback. So this would have been a nice little setup here at 88.50. It hit it on the nose. What is the 88.50 for those who are paying attention? 88.50 in the S&P. This is a day-generated level. What is it? In any case, the 88.50 yielded 5 points so far, and it just looks relatively weak-ish. Yes, it's the full session mid. Full session mid. You got to pay attention to those mids if you're day trading. Doesn't matter what the product is. Those mids come into play. This is something I learned from a guy who passed away. It passed away recently. I learned it from him about 15 years ago. This tells me the S&P is really imbalanced. The entire overnight session has held yesterday's range, and yesterday's range has been mostly balanced. It's a double distribution profile, but it was mostly balanced, mostly a grind. Not an easy trade yesterday. And we have 263,000 contracts traded for non-farm payrolls. That's actually pretty light trading for such a major event. The inventory overnight's 95% short. The market has not been able to stay above the prior settle or close, whichever one you want to use. Those are not the same. 95% short, meaning 95% of the overnight volume, 95% of that 263,000 that you see there on the screen has taken place below the prior settle. That's what the inventory percent means, and that's a very accurate number based on tick data. The range is pretty tight, 41 points. It's well within the norm, and I call it tight relative to the most recent data, the most recent action. We've had 80, 85 point range overnights, and then that tells us that the day session is likely to be pretty active. Coming into today, we have a fairly muted session here. The point of control has moved to 38.90, which is now becoming the key number in the area. So 38.8850 is the mid, just held on a retest. Pretty nice setup there. 6 points of a pullback. The low looks weak here, expecting it to push further down. The 38.90 half is the full session VWAP, and then the overnight point of control is at 38.90. So there's a lot going on here in this 88 to 90 area. Keep an eye on it. Let's see how the open treats it, and that'll be our first clue in our puzzle for the day. Okay, so that's that. A quick look at yesterday, just to talk about what was expected yesterday. We were looking for the market to really squeeze the primary scenario, which is in yellow here. I should go back to my green and pink. But the primary scenario is potentially a pullback into the 38.50. We didn't get that. We got a market that pushed off the open right away. We opened at 67. We put in a low at 66.50, and we shot straight up. So we had a bit of an open drive market. So we don't want to, I issued a very early warning to shorts, not to take a short there. And the idea is that it would likely immediately test 75, which was not hard. It opened at 67. It's just the 75 is just 8 points away. It pushed to 75, pulled back, broke through the 75, pulled back to where? Pulled back to 76.50, something like this. Our first setup of the day, right? So we broke that key level, And remember, this is what I marked yesterday, that we're looking for a break of 75, pull back, and then the long into 94, And what you'll see is that the first high yesterday was at 92-ish before it pulled back. Didn't quite get to 94. Then it pulled back. And then what it did is it pulled back. Then it pushed again to 96, getting you that 94. Expected consolidation in the 94 range. That's right here. And what we did is we consolidated between the 3,900 all the way down to 38.90. So this consolidation happened, the break of 75 happened, the pullback to 75 happened, and then the target is 39.10. 39.10. 39.10 comes from way back here. You'll see it multiple tests in the 39.10, 39.12. It got to the 39.10, put in a high of 39.14, and sold off from there. Very on point. Again, the goal here is not to tell you that I'm right, not to prove anything. The goal here is to say, here was the plan, and the plan was spot on by luck, by sheer luck, okay? So the secondary, of course, is to test the 38.75, unable to break through, and then it starts to sell off, and that would actually be the better opportunity. The downside opportunity is the better one. It'll be quicker, and it'll cause a reversal in the one-time framing. So what did we do yesterday? Let's take a look. So overall, what we've done is we have balance for 3 days, right on top of that 37.75. I get so tired of saying this over and over again, but that's the base. Then the day before yesterday, we broke higher, tested into the box, and then finished slightly higher. And then yesterday, we opened at the upper end of the range and continued higher. And what we had yesterday is a completely balanced trade, right? We settled at 39.05, so we've settled above 3,900. But overall, not an elongated type of profile. You might have noticed yesterday that the delta was going opposite to price. And that's one clue. So I'm going to give you a little nugget here. That's one clue that it doesn't mean that the price doesn't keep pushing higher. It just means that it's likely to be very, very labored, kind of like someone who's trying to climb a hill, but they can only take very, very short breaths, right? They're going to be very weak. So if you look at the relative delta, let's look at the relative delta of yesterday. Gonna have to reload. Try to reload as little as possible. So here's yesterday. If you look at this, what is going on here? Yes. Go. I'm like lost in here. Okay, here we go. So if you look at the delta yesterday, here it is. This is the cash open, 8:30 Chicago time. That's where I am in Chicago. We open up. Imagine that the open of this bar is the zero line, the 5,500. Okay, so that's the zero line for the RTH session, but you can see where we are. We pop higher. So I read this as an open drive. Price and delta lift. But look who's lifting. Mainly small lots. Large lots participate, so I'm still seeing this as an open drive. Very large lots, which is 100 lots or more, not in the game. They're not in this party, okay? So now let's move forward. What we find is delta is following small lots. It can follow small lots. Generally, it follows either small lots or large lots. And what's happening is as price is moving higher, delta is moving lower. Large lots aren't participating. Very large lots are not participating. This is a really weak rally, is what this is. This is where the delta makes sense when we're not in expiration or rollover. And then on the close, it just gets hammered. These small lots get absolutely obliterated, and it just goes completely negative on the session. Remember, it started at 5,500, started here. So most of the day, the delta is above but falling, and then it just gets below and it's tests from below and it's not able to participate. So as this climbs, it's going to be a labored market. Now, how does a real rally look like? A real rally will have small lots, large lots moving the same direction, and very large lots kind of bracketing up like this, right? With big lifts. So these are clues, and I commented about this in the Head Trader channel at Convergent Trading, that it's a very labored rally, which makes it really hard to read from an order flow perspective. You'll have when the small lots are acting, you'll have pretty poor pullbacks to lean against. You have very poor structure. It's just like a churn, but it also allows people to think, okay, the high is in. Okay, the high is in. It looks weak. The high is in. Just understand that the participation there is not so great. So this is a piece that I wanted to share with you. And then looking at tonight's session, here's what's happened tonight. Guess who's in control? Yes, small lots again. So far, small lots doing a lot of the trading. A lot of the volume is being done by the small lots again. And then we get our non-farm payrolls right here. And we get a little bit of participation. You can see the sellers, the large lot sellers are way back here. So you can see large lot sellers sold way back here at 4 o'clock. Okay. And then flat. And then boom, they hammer. So they didn't hammer on the non-farm payrolls. Look at how delayed that action is. So you had non-farm payrolls, small lots getting hammered, large lots hammering just smashing the bid a little bit. But then the real players come in a little bit later on this leg here, on this other leg, and we have a continuation and now reversing with large lots not buying them back. To me, this says that it's likely to struggle. And the underline is the number that I talked about earlier, 38.95. 94.95 remains this underline because that's the area that got tested before. Not only is it a price action pullback area, this is the area that got tested before the large lots and the very large lots decided to just smash the bid. Okay, and so we're walking back here. We have what looks like an impulse up, small pullback. The pullback again does not pull back enough, and we're pushing against this high. This is very likely to continue higher into the 95, and I want to see what this 95 does. Remember, the overnight point of control is at 90. The full session VWAP is at 90. The full session mid is at 88.50. Earlier, I said this looks like it had a weak low. It was at 38.82, and then it did, and I said it's likely to continue lower, and the continuation lower was very poor. It went from 82.25 down into 80.50. We could see that here. I don't know why I'm not sharing this with you. So if I look at the order flow chart, you can see right in here that it made a low back inside bar, and then it made another low, and this is going to be a weak low, so we expect it to break, and it did. It broke to the downside down to 80.50, marked right here, and then we start to see pretty good volume delta participation here, some pretty good lifting and hitting. In order for this to hit and hold that 297 lot, there had to be a bid that was standing there, and it went through the bid with two contracts, and then boom, it starts to lift. The green numbers are buying imbalances, the pink numbers are selling imbalances, and then we're back at the full session mid. Okay, so that's the order flow side of it. I'm getting way in the weeds here. Let's move on. Just get carried away. So what does this mean? Balance profile up here. We've pushed up against the 3,900, and now we are opening in balance of yesterday. We're seeming a little bit weak. The overnight session has moved to where the prior low of the day is 38.6650. That is the 2-tick low we made off of the open before we exploded higher yesterday morning, and the overnight low is at 38.68. So just a couple of points away. What are we doing down here? After driving prices yesterday, why are we down here again? This is why I believe that this is likely to top out a lower high, top out, and then that low is likely to break, which breaks the one-time framing up. So we have been 1 TFU. 1 TFU. One time framing up. We're starting to establish a daily trend, one time framing up. We have spent the entire week inside of the prior week's range. So if you look on this chart, you'll see the prior week's low, 37.41, prior week's high, 39.50, and this is all we did all week. There's our low for the week, there's our high for the week. And inside week after some selling, this is likely to be a pretty choppy, two-sided, badly open into the weekend. That's the conclusion that we want to arrive at. So what are we looking at for today? Again, we're watching this 95 area. Oh, this 38.95 area. Okay, we're watching that for a reaction. That's the line in the sand or the over/under line this morning. We have a V bottom. We have a collision here with some pretty good action at 38.75. Remember the 38.75 high that we had from a couple of days ago? We dipped into that. We are rejecting. We're moving back up, and we're forming an impulse pullback and likely continuation. I want to see what happens on the open here. So as we plot out what we're doing for today, let's look at our expectations for today. Let's make this a little bit bigger. As we plot out what we're looking for today, I'm looking for an open auction and a battle in this 38.90 area against the point of control, VWAP and mid. I'm looking for it to try for the 95. Try for the 95 this morning. If the 95 holds, which is I'm expecting it to hold, it might go to the 3,900, but I'm not expecting it to push. If it holds, I'm expecting an impulse down, consolidation, and I'm not expecting the high to go in the overnight session, consolidation, and this is like if it falls back through the 38.75 again, then I'm expecting this to run to 38.50. That's the next key area below. 39.50 becomes a target from either a test of 3,900 or 95. Ideally, 95 gives us 45 points of range to play with, which is about where we have been lately. If it doesn't hold the 95, then we're looking for the next point of control here at 30. So 38.30 becomes the next key area to check right in here, okay, before we bounce up into the close. That's the primary scenario. The secondary scenario, the secondary trade of the day is we open, we're unable to balance the overnight inventory, which is at negative 95% or 95 towards the sellers, and then we push into the 95 with an impulse, consolidate, and then we squeeze through the 3,900. This is likely to flush out some of this morning's sellers. Remember the volume being mostly under the settlement. Settlement stat gets taken, and now we have a true squeeze. And the target above is 39.20. We already hit the 10 to 12. 39.20 becomes the key area above. That's your secondary scenario. The lesser likely scenario, primary scenario, is that this is a rollover day. We have a lower high from 39.50 to 39.14, and now we're starting to move lower on the stronger non-farm payrolls release. I know it's a lot to take in. It's been 25 minutes. These are supposed to be 15-minute videos. I think you guys should pay me a lot of money to condense this information into 15 minutes so you can move on, because I seem to continue to run longer. But thanks for tuning in. I was going to do the where are you from thing, but we're out of time. Good luck. It is Friday. It is the summer here in the Northern Hemisphere. Do not bet too big a part of your account on today. Non-farm payrolls are behind us. We're likely to just make a move in the first hour and a half and just chop around into the close into the weekend. So don't invest too much in today. I'll catch you here on Monday morning. Take care.